Good evening. Welcome to the Earnings Review, your tidbits into company financials and operational insights. Thank you for joining us as we broadcast from our Hampton studios in Harare, Zimbabwe. I'm Ibn Mabunda, your money man. On the show, we engage top echelon executives to get you up to speed with first-hand information. We also chat with the most competent analysts on the market just to ensure you're finished with relevant and comprehensive market analysis. Tonight, we focus on Turnall, a listed industrial firm on the Zimbabwe Stock Exchange. Now, Turnall has been in operation for over 77 years and is a market leader in the production of fiber cement roofing as well as piping that are used in water as well as sewer reticulation. The entity has expanded its footprint and distributes its products across South Africa, Zambia, Malawi, as well as Mozambique. Its key markets include the low-income segments wherein it produces and supplies building material, as well as local authorities, particularly the municipalities wherein it supplies piping equipment. Let's have a look at the timeline just to understand how the entity has evolved over the years and come to be. Well, the group has its roots to 1943 with the establishment of the Porter Cement Industries in the then Salisbury. By 1945, it had expanded its footprint into Bulawayo, and in 1947, this saw the commissioning of a new plant in Mutare, and in 1949, particularly in Bulawayo, the firm introduced its first asbestos plant. In 1953, Turnall and Newell bought out Alfred Porter, resulting in the formation of what is of course now known as the Turnall. In 1962, bulk cement silos were installed in the then Salisbury as well as in Bulawayo. In 1992, a brand new plant was installed following the acquisition of new equipment from Lamont, France, in an acquisition worth 25 million United States dollars. In 2002, a key development would take place as Turnall was listed on the Zimbabwe Stock Exchange. 2004, the entity embarked on an automation exercise, which then saw the group advance its operations here in Zimbabwe. In 2008, the firm started the production of asbestos-free products, which were of course destined for the export market. In 2013, the group started the manufacture of concrete roofing tiles. Now, to look at how the firm is organized, Turnall Holdings has 4 key divisions, one of which is operational, and with the one it has 2 subdivisions, the Turnall Building Products as well as the Turnall Piping Products. Now let's look at some of the key products that are produced by the group through these very divisions. The entity plays in a number of key segments, among them the building materials, wherein it produces ceiling boards as well as roofing sheets. It also produces water and sewer reticulation piping, which is used by local authorities. The group is also invested in the manufacture of concrete products, among them roof tiles. The group also produces Spanish pavers. Now on to some vital stats where the group is concerned. With the current share price of 100 cents, the group is a market capitalization of 500 million Zimbabwean dollars. The stock has surged 800% since the year started, vis-a-vis a consumer discretionary that is up 625% to date. Comparatively, the ZSE All share is up over 650%. Some major shareholders in the group would include the National Pension Scheme with a 32% shareholding, as well as the LHG Malta with a 25% shareholding. Now this concludes the Halaju section of our show tonight, and in just a moment we will look at the operations of the entity. Now don't go anywhere. Now, joining us on the earnings review is the finance director for the group Turnall. Good morning, Samson, and thank you for joining us on the earnings review.
Good morning, Eben. How are you?
Can't complain. Should only get better your side.
I'm all right. Thank you for hosting us.
Splendid. Thank you for being with us on the platform. To get the ball rolling, how are you faring with the pandemic?
We are having to adjust to the new normal. with a lot of changes in our operating environment, the trading conditions, but we are adjusting, and we hope the situation will improve. But as of now, we've adjusted compared to the second quarter.
Recovery necessary. Now, this conversation is coming pretty much soon after the release of your half-year results to mid-year. Now, I just want us to have a conversation where that is concerned in terms of what informed the figures that you presented. And perhaps to get started, we'll start with your top line, wherein your sales volumes for the half year took a 3% dip vis-a-vis the 2019 performance in as far as the half year is concerned. I would not want us to zero much on the numbers in terms of the millions, because those millions in the face of inflation could pretty much spell anything. But can you take us through what informed that very narrative there?
The volumes came down by 30%, as you have said. The first half the first quarter we started off very well, with volumes 45% above the previous year in the first quarter. But the second quarter were affected by the COVID pandemic, where it meant that in April we had zero sales. That is the total lockdown. And when we started to produce, we did not sell anything. And then we started selling in May and June. But the conditions still were not, there was so much restriction. So our volumes came down significantly in the second quarter. That's why then we ended up with volumes 30% below the previous year. This then informs the turnover.
You still wanted to add something?
Yes, so I will say then our volumes ended up, sorry, I'd say our volumes were 3% below the previous year. But in the second quarter, we did sell, but also our product mix was affected by the COVID pandemic. So you find the demand for the customers was mainly on the product that are low value and low margin.
And it looks like you had gotten off to a very good start in the first quarter. I mean, a 45% jump. That was quite a significant surge in that regard. Now, can you take us through the bottom line? There was an 82% dip where your profit after tax position is concerned, plunging from $154 million in inflation adjusted terms in 2019 to a figure of 28 million Zimbabwean dollars. What informed again that particular performance?
Okay, the cause of that reduction in profitability, it comes from the reduced turnover, where we had the turnover of 202 million down from 290 million. And then our margin as well was affected, mainly caused by the product mix. And we also had to reduce our prices in order to stimulate demand in the economy. Then going down, you'll see on monetary gain or loss. Last year we had a 64 million monetary gain, but now we've got a 5 million monetary loss. In 2019, coming from 2018, we highly borrowed, which meant that we were enjoying the purchasing power. We were enjoying when the purchasing power was coming down, we're gaining. So we gained that 64 million. But our borrowings have been coming down. Is our business improved profitability? So that's why now we do not have that monetary gain.
I realize. Now, obviously, the pandemic still becomes very much relevant, as that has come in the way, especially if your second quarter. Now, given the fact that some of your raw materials come from as far as Europe and several other places, how much did you suffer in terms of your supply chain during this very period?
We were affected during that period, in that some of our raw materials were in transit, and it caused delays in bringing them here. So we only started getting our normal supplies around the end of July. That's when now we got our normal supplies, and as of now, we have got back into the normal supply chain movement of our products. So it affected us the months of April to June.
I get that. I get that. And government is on record for having announced an $18 billion bailout package. Out of interest, has anything trickled down to Turnall yet? If not, are there any indications that something could actually materialize from government's end to your end?
We have not received anything from that bailout package, and we are chasing it. We hope we'll get something out of it.
Good luck with that. Now, there are foreign currency shortages that are playing out in Zimbabwe, and recently the Reuters system has sort of brought in a little bit of fluidity where the formal trade of foreign currency is concerned. Given the fact that some of your material that gets into your production is actually imported, how are you navigating and how are you faring with the persisting foreign currency shortages playing out in Zimbabwe?
Well, this has been a challenge for the business over the years, and we've struggled to meet our raw material requirements, and it has affected our volumes. This is what then necessitated us to go into the export markets in order to generate foreign currency, which unfortunately now is being affected also by the COVID pandemic, to try and get our product into the export markets. But we are happy with the recent policy whereby the government has allowed companies to sell in US dollars. We are now able to generate our foreign currency requirements from local sales.
A positive development, and hopefully that would produce tangibles. But you mentioned exports. Your export contributions, or in terms of volumes came in at about 3% of your total or your aggregate turnover figure. Now, I do recall that a couple of years back we were sitting at about 0.3%. I remember earlier on having a conversation with Rose where that is concerned. What has informed that particular development in terms of the increase where the export contributions are concerned? And also in the same vein, what prospects do you see in as far as your growth where the export side of business is concerned?
Okay, our exports, as you rightly noted, they were very low. It was less than 1%. We then targeted to increase our exports, and this 3% is only coming out of the exports for the first quarter. We did not export anything in the second quarter after the beginning of the pandemic. So we're actually targeting about 7% exports contribution to the business. Going forward, we still believe we can do much better on exports, and would want to increase those volumes, particularly our sales into Mozambique and South Africa. There is a very big market in there where we need to where we can sell our product. Although there is a lot of competition from product coming out of Europe and in South America, but we've got the advantage of proximity, that we are near those markets.
I understand. The group has indicated interest to increase the use of local fiber in a bid to reduce dependence on imported raw materials. Can you give us a little bit of detail in terms of how things are progressing on that end?
Yes, Even we made some significant progress in the past year towards increasing our local fiber requirements. At some stage, we got to about 60% use of local fiber, with 40% coming out of imports. But however, of late, since the beginning of the year, the mines have struggled to supply us with fiber. As a result of our local content, fiber is come down to below 10%. The mines are, remember, the mines, they are not mining, they are processing out of their dumps. So they are experiencing some challenges which have resulted in us having to import more of the fiber than local.
Going into the future, what prospects exist in terms of you being able to procure more of that local fiber from the local mines?
The prospects are low. I cannot talk on behalf of the mines, but we hope they will be able to then get into mining, to mine the asbestos instead of processing the dump material that they are doing. Then we will then be able to get more of our fiber locally.
Quite clear. Now, can you tell us about the prospects where your Nutec fiber cement is concerned? I think several months back you also indicated developments on that very end. Can you give us an update where that is concerned?
I think it's coming up well. When we talk of exports, it's that product is the non-asbestos product that we are exporting into the regional market. So that's the one which has grown from 0 to 3% and is growing. So there are significant prospects on that product.
Quite clear. Now, can you to delve into your performance in the piping equipment? How are you faring given that you've got competition from the likes of Pro Plastics and a little bit of Masimba on the other end? How are you navigating that sphere of your business?
That business is not performed well over the years, and I think the major challenge on that project is we require huge projects which require the major distribution lines of sewer and water, which has not been happening. That is normally done by local authorities. So we've got the competitors that you talked about, Pro Plastics and so on. We are slightly different in that they mainly concentrate on low diameter pipes, which are for, but we concentrate on big diameter pipes, which they don't produce. So we are in our own market, where our competitors are external. But at the moment, the major challenge really is that there are no major projects that require the big diameter pipes.
Now, can you tell us about your working capital and how you are faring in the face of inflation? How exactly are you handling your working capital? Are you delving much into more of cash transactions, or, I would be interested in hearing about how your debtor days are actually playing out and how you are balancing that out.
Okay, thank you, Eben. Working capital in this environment is a big challenge, particularly with hyperinflation. What we have done is to reduce our debtors terms, and at the moment we were on 30 days, and then we moved to 14 days. Now we are on cash. We only allow COD for our major customers, so it will be up to 3 to 5 days terms for our major customers. But overall, we are trading on cash mainly. Even on our exports, we are on a cash basis. And we've been able to sell on that model.
Quite a positive one and necessary in the circumstances. Now, a couple of years back, you were reporting a series of losses, but over the past 2 or so years, you have rebounded into profitability. Going forward, as we wrap up, Samson, can you give us what would be your strategic thrust and how you intend to cement your profitability position that you've been able to rebound into over the past couple of years?
Okay, yes. So the business is profitable, as you have said, and we are aiming to improve the profitability of the business. For the time being, we've our focus is to regain our market share locally. Which market is there, and that is our major thrust, as well as to get into the export markets to improve our export earnings. But overall, we expect to continue to improve our profitability in the future.
As follow up to that, are there any key developments on the digital front? Is there anything to look forward to, perhaps on the tech front, looking at the fact that the fourth industrial revolution is upon us?
Yes, thank you for that. We now have an online store which we launched a few months ago, where our customers can buy our product from anywhere in the world. And we have seen that working, particularly on the tiles where we have got people from the diaspora who are actually buying their products, and then we deliver to their premises. So the digital front is where to be in this environment of the COVID pandemic, and it also reduces costs of transactions.
Well, I guess that does it for today. Thank you, Sam, for joining us on the earnings review.
All right, thank you very much. It was a pleasure.
Awesome. Good luck with the ensuing financial season.
Thank you.
Now, joining me on set is our very own investment analyst, Respect Quincy. Respect, good evening, and thank you for joining us on the earnings review.
Thank you, Eben. It's always my pleasure.
Beautiful. Of course, we are getting into the details of Turnall, one of the listed firms, industrial firms that we have on the listed on the Zimbabwe Stock Exchange. Now, I want us to focus pretty much on their most recent trading update, which detailed their first quarter performance to the 31st of March 2020, which also spells out how they have responded to the COVID and what it is that has played out since the year has started. And according to that very trading update, the group sales for the quarter, contrary to the trends that we've seen across the market, their sales volumes for the quarter were actually up 45% over the period. Their export sales were actually contributing 4% of their turnover in that regard. What can we read from the figures that they have presented us with?
Yeah, sure. So it's indeed a performance that defies what we are seeing elsewhere. I think there's a general dip in terms of demand and volumes across the market. In fact, on average, the market is realizing about 50% in terms of declines in volumes. And this is mainly a culmination of tight macro environment, which is also affecting affordability of goods and services. And for Turnall to really post this kind of performance is really quite a surprise to me as well. But I think trying to zoom in and look at the kind of products that the company manufactures and also export, the mainly tile products, and some of these definitely find the markets in terms of the region, and they've been able to leverage on that, especially over the past few years. I mean, in the past 2 years, especially when we turned into re-dollarization, it has become easy, or it has become more competitive to play in that export market due to the tumbling of the local currency. But affordability on the local side remains a challenge. construction activities have actually dwindled. Many companies who are in the mortgage space and who are also into the construction space have also slowed down in terms of their construction activity due to this volatility in terms of currencies. But I think for Turnall, they really had a good first quarter, just as a carryover impact as well of the cyclone Idai activities that they'd been contracted to do in the prior year. So it might still be that residual effect. And also getting into 2020, there's a lot of participation that they're doing, especially in terms of sheets in the tobacco sector. So they also get to have that kind of contribution. But construction generally has been coming off. Just to get into a bit of a picture in terms of the volumes, I think this is a 5-year trend of how the company's volumes have fared, and there's been quite some volatility, but 2019 was really a down year, which really speaks to the aspect of affordability challenges that are being faced in the economy. So for 2020, I think there's that bottoming up effect to say there was really a sharp decline in terms of prior year numbers, and we have reached a point where you can no longer go down, and they're now beginning to see a stabilization and in fact a growth which also is emanating from exportation of their product.
To zero in on the figures there, you look at 2015, they had sales volumes of 60,000, which narrowed in 2016 to 36,000 metric tons, increasing marginally to 40,000 in 2017, before a sharp jump in 2018, which produced a figure of 56,000 metric tons, which then in 2019 declined significantly to just over 42,000 metric tons. What can we read in terms of their volumes in that regard over the past 5 years, so to say?
Yeah, sure, thanks. So there's been really some volatility that we have seen in terms of how the company's volumes have progressed over the years. But I think more predominant, the jump in 2018 actually reflects some macroeconomic dynamics, especially around the issue of affordability. There was a lot of activity that went on that government was financing in 2018. We saw even the GDP growth responding sharply to that fiscal stimulation which government undertook. And we also know that on the monetary side, TBs were awash in the market, but these were mainly to fund government activities, and government was so predominant in funding of the agricultural sector, and so affordability was quite high. And with this 1:1 situation in terms of the exchange rate, we also saw expenditure even in terms of imports actually growing. So this jump in 2018 reflected that macroeconomic situation. But then coming into 2019, for the greater part of the year, we're now under a re-dollarized economy, and affordability becomes a challenge, and people are foregoing especially construction activities. But now into 2020, we are now seeing a partly reversal of the trend, but we're coming from a very rock bottom, and obviously there could be some short-term gains that might be realized. But to really look at it and see and say we might find that trend being sustainable, I don't think we can have that liberty.
Respect. How important and how significant is their footprint, or should I say, is their inroad strategy where the region is concerned?
Thank you. I think you note that currently Zimbabwe is grappled with foreign currency challenges, and post the de-dollarization of the economy, obviously foreign currencies become even more scarcer, and so it is only wiser for companies that are basically domiciled in Zimbabwe to be looking for avenues of generating this foreign currency for two reasons. One, you need to keep your operations running. Two, you also need to be able to play in those respective markets for the sake of stability. I mean, when you have stable earnings, I mean, you can actually compute growth as well as to even diversify. So for Turnall, looking at the structure of their income, about 95% of their income comes from the local market, and this means that they are more vulnerable to some of the economic vagaries that may be at play, be it inflation or exchange rate losses. And so now, when you find yourself in an environment where people's disposable incomes are shrinking, it also means that demand gets to shrink, and gradually your profit after tax will also decrease. So this move to actually look at the region for opportunities, Mozambique, Zambia, and so forth, it actually increases the best, it diversifies the operation. You get to cushion yourselves in times where one market is down and the other one is possibly up. So I think that this is the significance of having a diversified operation. And looking at where Zimbabwe is right now, the average market is losing in terms of volumes, at a rate of at least 50%. And that's quite huge. Looking at industries like beverages, the numbers are even worse. And it's economy-wide. So for Turnall to be focusing on the region, I really feel that it is quite strategic, but they really need to push up in terms of increasing that ratio from about 5% of total turnover to anything above 20%. This will ensure that they adequately stock and that they also stabilize their net earnings.
Talking about stock, some of their inputs are actually imported from the likes of Europe and in places of such nature. And looking at this, how Zimbabwe is currently grappling with foreign currency shortages, how do you think they could expand their footprint, particularly in the region? Because at the moment, I'm aware that they are making use of some kind of agents who distribute the brands on their behalf. Do you think maybe they should be looking at opening outlets, say in Mozambique or places?
Yeah, that has been the strategy there to reduce the gap in terms of the lead time. Sourcing some of these inputs from as far off as Europe, and to bring some of that supplies closer to home. And Mozambique seems to be the gateway and the focus now. So there's been maneuvers to try and reduce these inefficiencies and also the bloated cost that comes with having to import from quite a distance. But those are things that are in the pipeline. And it is also equally important looking at the aspect of foreign currency challenges in the country, because whenever you have this exposure in foreign currency, which is quite huge relative to your income, it also weighs on your profitability as well. So whenever you reduce the export cost downwards by actually reducing the distance to where you're sourcing your product or your inputs, it also increases your profitability even in real terms. So they really have this challenge to actually reduce costs, but more importantly grow income by moving speedily into the region. And I think the environment actually necessitates this move, because whenever your local currency is losing against the regional currency, it actually means that you can even be more competitive in that export market. It's now a function of how your product stands out, or how your product gets to be compared relative to other products in the region. But some of their products have been a hit even in South Africa and so forth. So I think this is a gradual process, but they really have to ensure that their production processes are up to standard.
At this point, respect, I want us to look at how the firm has performed over the past several years. This is a company that is coming from a series of losses between 2016 into 2017, rebounding to a profit position in 2018, 2019. What do you think we could expect from the firm getting into the second half of 2020 and, of course, beyond?
So I think what we read from this performance is that basically the company is beyond the curve. They've really faced a challenging past, especially in 2016 and 2017. But they went on to re-strategize and reform the organization. Basically, that restructuring exercise led to a leaner structure and a more efficient structure, which ensured that they returned to profitability in 2018. But also 2018. It was the same year which government undertook so many projects that ensured that there was enough liquidity in the market. So obviously people were borrowing much and people were doing a lot of construction activities. But getting into 2019, of course, this is inflation adjustments which saw that huge jump. But I really feel that given that the company is now exposed a bit into the region, it's now beyond the corner, and we expect the company to perform well.
And now, as we round up respect, the stock Turnall is up 800% vis-a-vis an all-share index that is up 650%. What can we deduce from that very matrix there?
Yeah, I think looking at that strong rally, to me, it doesn't really mean much in terms of performance. Every other company on the ZSE is up on a year-to-date basis up until the period when the stock market was suspended. The ZSE is up 600%, and most counters are up beyond even 1,000%. But when you're looking at the underlying performance of these companies, we're really seeing that there's a dip in terms of the operating performance. Volumes are down, and obviously those numbers are just reflective of inflation, and so real profitability has actually been challenged by inflation. So you expect earnings to actually be slowing down in real terms, and when earnings are slowing down, analysts get to put lower valuations on those numbers. So for Turnall, I know that, yeah, of course the first quarter numbers are showing growth in volume terms, but I also feel that they are not immune to what's happening in the general economy. This Covid-19 is likely to cause a strain in terms of demand, both in terms of the segments in which they're operating, and even regional business as well is going to be affected. So this diversification issue gets to have less impact in terms of cushioning performance. So I don't really see much, read much in terms of the rally, in terms of the stock market rally. Rather, the underlying performance of many companies is actually weakening, and the stock market performance only reflects a flight to safe haven by investors who are actually worried about the current crisis in Zimbabwe, and that's why we have those huge gains.
Well, respect, thank you for the insights. We're out of time and we have to go. Thank you, viewers, for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our informative website, www.equityaccess.net. Remember to catch us every Tuesday, every Thursday, 7 p.m. Central African time on this very platform. And from the Equity Access team and I, Danke and ciao.